Hi, Professor Barati. I'd like to go over our case study for week 3. Help you get through it. So it's a job costing problem. Just so you know, there's a correction on the case study. The playpen's accumulated cost is $679,000, not $679,999. So we have a manufacturing company that makes furnishings for infants and children. The company uses a job cost system and employs a full absorption accounting method for cost accumulation. So what does full absorption accounting mean? It's basically our statement of cost of goods manufactured statement. It's essentially costing goods by absorbing direct materials, direct labor, a manufacturing overhead that is applied to WIP, and so therefore all direct and indirect manufacturing costs only go into the cost of goods sold or the product cost. Unlike variable costing, which you've learned about in your cost volume profit analysis chapter, variable costing takes the fixed cost components out of the product costing and only works with variable costs such as direct labor, direct materials, and variable manufacturing overhead such as indirect labor, selling costs like commissions. So those are two important distinctions to know, because absorption costing is GAAP. You have to report that. Variable costing is more for internal analytics, okay, for decision making, because your fixed costs are fixed, therefore they don't come into play when you make decisions on dropping products or adding products. So that's what full absorption counting method means. So let's go through our problem and essentially see what they want. First of all, there's a lot of information here, and you're not going to be using most of it. The point is for you to understand the components of the absorption cost method, job costing, and manufacturing overhead, and figure out what information in all this case is relevant. Most of you are working like myself, and in the real world, problems that you have to solve in accounting, such as budgeting and things like that, are not all the information is not given to you in a nice package like in textbooks. Things are not always given. So in the real world, we basically have to disseminate different what's relevant in the problem, what's important, and what we're going to use. So what I would do is start out with the requirement and then work your way up. 1. Describe when it is appropriate for a company to use a job cost system. So 1 is easy. You don't have to do anything with the case study. Write just a nice paragraph. What is appropriate for a company to use a job cost system? Personally, while I was trying to calculate and figure out the answer to the case study, I started asking myself, why is this company even using a job cost system? With so many product lines and so many different quantities, it's almost as if they should be using a hybrid operation system that includes process costing. So you might want to challenge the job costing system here. But certainly, use your judgment and why companies should use a job costing system. 2. Calculate the dollar balance in Constructo's work in process inventory as of May 31st. So calculate the work in process ending inventory balance. 3. Calculate the dollar amount related to the playpens in Constructo's finished goods inventory as of May 31st. Explain the proper accounting treatment for over-applied or under-applied overhead balances when using a job cost system. 4. You don't even have to know what the over-applied or under-applied is. What I want from you in number 4 is a paragraph explaining what over-applied and what under-applied balances are in a job cost system, how you calculate applied overhead with a predetermined rate. Make sure you mention that. Make sure and give examples of how the applied overhead becomes over-applied and under-applied, and what journal entries you would do to close out the over-applied and under-applied balances. That's how I'm going to grade number 4. So let's go through our problem and figure out the dollar balance in the work in process inventory account as of May 31st and calculate the dollar amount related to playpens only in finished goods. So in our problem, it tells us that the following jobs are in work in process at April 30th. Job CBS 102, job playpens PLP 086, and dresses DRS 114 are our beginning balances in work in progress for May 1st, ending balance April 30th. So basically, this is our beginning balance for May 1st. The company's finished goods inventory, which Constructo evaluates using the FIFO method, consists of 5 items. So, the finished goods inventory for the month are as follows: cribs, strollers, carriages, dresses, and playpens. And it gives you the dollar amount and the unit cost. So, Constructo, again, this is your beginning finished goods. Do not let the FIFO confuse you with process costing or weighted average with process costing. Don't let that confuse you. Don't try to calculate your costs by using current production costs and current units like you would in process costing. This is a job cost. So it gives us our beginning finished goods inventory balance. So we have our beginning WIP and our beginning finished goods with our quantities, units for each. Constructo applies factory overhead on the basis of direct labor hours. The company's factory overhead budget for the fiscal year ending May 31st, so it's a fiscal year, totals $4,500,000. And the company plans to expend 600,000 direct labor hours during this period. Through the first 11 months of the year, a total of 555,000 direct labor hours were worked, and total factory overhead amounted to $4,800,000. $273,500. So total labor hours worked for the first 11 months and total factory overhead amounted to $4,273,500. This information is right now irrelevant to us. What's relevant is our budget of $4,500,000 and $600,000 direct labors. Those two numbers basically are going to give you the predetermined rate you need to allocate manufacturing overhead to your WIP account in this problem. So the $4,500,000 and the $600,000 direct labor hours will give you the predetermined rate you need to allocate manufacturing overhead as applied. And here are your labor hours. So from here, you can apply your predetermined rate calculated from these two numbers and apply it to WIP. Listed below are jobs that were completed and the unit sales for the month. So the jobs completed was CBS 102, POP 086, STR 077, CRG 098. Calculate the dollar balance and construct those work in process inventory account as of May 31st. So, here's how you would go about doing that. Essentially, your beginning WIP consists of these three jobs. What was added to WIP throughout the process were two new jobs, STR 077 and CRG 098. So now we have basically 5 jobs in WIP. Beginning, plus we added materials for each job, CBS and purchasing parts, PLP, DRS, STR 077 was added, and CRG 098 was added. That's current production, new production, added to WIP. The problem says raw materials and purchase parts are requisitioned for WIP. So you're going to have to use some of these numbers. Keep in mind, requisition means coming out of materials inventory, direct materials inventory, debit to WIP. That's what requisition means. Additions strictly means additions to raw material inventory. The problem here says that materials inventory account, which includes both raw materials and purchase parts, was $668,000. That's your beginning raw material balance in your raw material inventory. That's your raw material inventory balance, beginning balance, $668,000. What got added to that account were these two items. Those were debits to the direct material or raw material inventory account. These are requisitions that credit raw material and debit WIP. So, we added CBS, we did work, we had beginning WIP for CBS 102, we added current production to 102. We had beginning WIP of PLP 086, we added production costs to 086 in WIP. Think of your statement of cost of goods manufactured. You have your beginning WIP, you have your direct materials, beginning inventory, plus additions, less ending inventory gives you your direct materials used for production right here. Next, we add payroll. Direct labor debited to WIP based on hours and costs. So we're adding labor to CBS, PLP, DRS, STR, CRG. Debit WIP. Listed below are jobs that were completed. Before I do this, basically, all these hours added up, including all these hours added up, times your predetermined rate would be your cost of goods, would be your would be your manufacturing overhead applied. So let me correct that quickly. Hours based on the jobs times your predetermined rate would be your manufacturing overhead applied. Indirect labor would go to basically your manufacturing overhead control account. The jobs that were completed: CBS 102, PLP 086, STR 077, and CRG 098. So, if we look at what's in production for WIP, CBS 102, completed. PLP 086, completed. STR 077, completed. CRG 098, completed. Therefore, the only job in your WIP is going to be DRS. So don't drive yourself crazy trying to figure out WIP by using all these numbers. All you're going to do are use the numbers for DRS. So calculate the dollar balance in work in process account in May 31st. So you're probably panicking and saying, well, I've got to figure out the ins and outs of WIP for all these jobs. But all these jobs are completed except DRS. So the only thing you have to worry about is figuring out DRS work in process. So DRS beginning balance, materials used for DRS, direct labor used for DRS. Now you have to do manufacturing overhead applied. You know the number of hours, you know the rate. Multiply that, that gets debited to WIP. So beginning plus production gives you the amount, the cost of goods manufactured for DRS. What you have to come up with are the number of units that are at that are in DRS WIP. You have to figure out the units that went into WIP and come out with the unit cost. Next, explain the dollar amount related to Playpen's finished goods. The reason why you have to come up with units cost is to calculate 3. Again, the finished goods, basically what you want to do is run your T accounts with Playpens. So Playpens had now to solve the Playpens, essentially what you want to do is figure out the unit flow first. So it wants to know what's the playpen's finished goods inventory value. So to know that, you're going to have to know the cost per unit and the number of units. So look at the playpens and look at simply how the units flow through your accounts. So your beginning finished goods inventory for playpens is given to you in the problem right here as 19,400 units as a debit. So what you got to figure out is your beginning inventory in WIP. You have to figure out what came out of WIP and went into finished goods for playpens only. So follow the trail. So beginning WIP was 25,000. Production for playpens are the units completed, 15,000. So 15,000 units completed means the WIP was credited for 15,000 and debited finished goods for 15,000. So your playpens completed, which is a credit to WIP and a debit to finished goods. This is your debit to finished goods, and you have your beginning finished goods inventory as 19,400 units. Remember, this number is 679,000, not 679,900. So you have your beginning WIP plus your completed, which is your credit from your WIP into your debit into your finished goods, and then shipped, which is your credit to finished goods and your debit into cost of goods sold. And that will give you the number of units of playpens in your finished goods inventory. But what you have to do now is figure out the dollar amount. So the trick here is what you want to know is the dollar amount in your finished goods beginning inventory is 679,000 as a beginning balance. You already know that. But don't use this $35 because you're using the FIFO method. Remember that. So your beginning WIP for playpens is $420,000 in dollar terms. Now you have to figure out your current production. Your current production, based on the FIFO method, is what you're going to use to come up with your unit costs. So what got debited to WIP for playpens only? It's going to be your materials and your purchase parts, your direct labor cost. You're going to take your direct labor hours and multiply it by the applied manufacturing applied overhead rate. You're going to take basically the sum of your beginning WIP inventory for playpens, add them all up, and divide it by the number of units that were put into production for WIP. And that will give you cost per unit. The current production, you know, basically, you'll know what we just did was when we took the beginning balance WIP and the units completed. The units completed is your credit to WIP, debit to finished goods. So essentially, that's your current production. and that'll get you your rate, your cost per unit of playpen to get you your finished goods inventory for playpens only. So those are the relevant costs you need to go through that. Good luck, and hopefully you can get through this fairly easily. Thanks.